Go ahead and get started. So mute everybody. Okay, so as for the people that are watching the recording, let me know how the audio is. Let me know how the video is. I just installed my new mic, and I also went back to OBS just to see if there are any positive changes. If just let me know how the audio is, how the video is, etc. But yeah, we can go ahead and get started. So, bit of I don't want to say slow week. I did miss out on that pretty big move on EURUSD or anything USD. I think it was Tuesday. I did miss out on those moves. But after that, it was a bit of a rough start, and then we kind of just picked it up as the week went. So the chat here. Okay. Cool. So let's actually go through my list of executions and backtest this week. Okay, first scenario was, I believe, a backtest, right? AU and S&P. Was it? Yes, I believe it was. Yeah, I believe I missed the one. 1 second, guys. Sorry about that. Okay, no, I didn't miss one. Sorry about that. Okay, so backtest number one. I believe this was Monday, if I'm not mistaken. Pretty much the whole gist of what I'm trying to transition to with you guys, right, is the 3-step framework that we've been talking about for the past like week or so. And it's not necessarily a change of the style. I would just say it's an organization of the style. So I reviewed the selecting timeframes last week, I believe. We can go into that again this week if you guys didn't miss that or don't understand the details behind that. But I think that directly correlates to the 3-step framework, because you have to know what type of trader you are, whether it's scalp, intraday, swing, position trader, right, in order to try to stay within a range of timeframes, so that you can only find trades within those timeframes, so that we can follow the 3-step framework in order for us to achieve a winning trade, right? Because we know that the bottom line is, if you cannot win a trade, then nothing is really going to work out for you if you do not know how to win a trade. But the 3-step framework is essentially direction, liquidity, model, right? And I don't want to create a misconception. Models are, because the market is fractal, models can be used for execution, but they can also be used to create a bias, right? But what's important is that we have to know what the direction is based on the type of trader that we are, so that we know where to look for an execution, right? So you guys know that I primarily stick to the minor intraday / scalping. Why? Because I just believe that's the best, kind of bang for my buck in terms of the amount of time spent within the charts and the results that I am achieving. I get, on average, I would say almost a trade a day, maybe 2 trades a day with the 2 pairs, and I am starting to incorporate GU again. So that could probably increase over the next couple of weeks, which would kind of make me steer away from the scalping more into the minor intraday type of scenario. But that's just the restriction that I have set, right? That can accommodate my style and my goals. So with the 3-step framework, right, you have to know what your direction is. You have to know where liquidity has been taken, if it has been taken, right? And then you want to look for a model. And the reason why I'm incorporating that liquidity aspect is because it's very beneficial when it comes to timing the market. Most of the time, right, a lot of us will take a scenario, maybe hits SL, and then you get the real move. That just means that your timing was wrong. So how do we set a rule to accommodate for that? Well, right, let's see where the liquidity is. Has the liquidity been taken, right? Because if we want to take a model, right, then we need fuel within that vehicle in order to get us into the desired direction that we had analyzed before. So for example, If I am bullish, right, then I'm looking for fuel to then give me a model which will follow the original direction, right? It's kind of like the simple way of explaining it: direction liquidity model. So when it comes to the scenario, let's actually zoom in here, right? We know that the external is bullish, right? And I don't necessarily pay attention to the swing as much, just because it doesn't really help me out much unless I'm looking for, right, an external target, right? So if I'm looking at my swing major intraday biases, then for the most part it's mainly to look for an external POI or an external target, right? I'm not saying that I'm going to trade every scalp to get that to get that swing target, but if I have a minor intraday trade, right, everything is in alignment and I have an external target via the form of a swing high, a swing POI, etc., then I'm going to do my best to try to align them so that I could formulate a scenario, right, that could maybe even allow me to extend my take profit a bit rather than just using the external or the immediate external solidified point. So, right, from what I'm looking at here, we know that liquidity has been swept, right? But we also know that in order for us to achieve that liquidity sweep here, we have to be internally bearish, right? That is why, right, this POI is still in play, right? So unless I get a transition to the upside, then I can't necessarily justify a scenario. So we got the reaction from the POI, right? We got the POI to create, essentially right after the POI, we created a form of unwillingness via the form of a CBOS, right? A retracement. However, this is still technically bearish, so I cannot buy here. This is my high risk scenario. I'd be guessing that this is my low. The only way that I'm going to confirm that I am bearish is if I have my POI, my reaction, and then the internal move fails, right? So this is not disruption because we did not take out the POI. There was no disruption in terms of an order flow basis, but there was disruption from a structural basis, right? Why? Because we have a high coming into a low, coming into a retracement. That retracement does not create a new low before we take out the pullback high. So because we have the structural disruption, then we are justified a scenario here because it is now in alignment with the sweep and the external direction. So the internal direction leads to an external target, right? And this would have been right around, I would say, 2 to 3 to 1 risk to reward, which is very, very good in my opinion. But yes, on to the next scenario. Right, this one was the S&P. So once again, right, we know that the direction is bullish. How do we know that? Because obviously price is going up. It doesn't need to be all that complicated. And like I said before, due to the fractal nature of the market, we can use models to dictate a bias as well. So as you can see here, we have an LGC. Because we have an LGC, we know that we are still confirmed to be bullish. Now we just need to find a scenario that fits the model internally so that it can be supported by the external, right? So once again, internally, right, after the high has been taken, right, then we see the internal pullback, right? The internal low is solidified as the quote unquote pullback low after we take out the immediate level of structure. We take out the immediate level of structure. This is now confirmed to be the pullback low. Not to mention, it's also a variant of an internal LGC, right? So if I am to take a trade, then more than likely any move here has to have the invalidation point of here. Why? Because this is the invalidation point based on the external structure of this pullback. So, right, even if I take my execution here, right, which is based on another LGC internally, which is where we sweep liquidity, right, and we take out the internal structure, however, the external high is still intact, right? That means that if this is still intact, then I cannot move my SL or I cannot move my invalidation until after that has been taken. So if I'm taking a scenario based on here, my invalidation still is here, even if my POI low is here. So with my invalidation being at the low of the POI, right? Once we take out the immediate level of structure, okay, now we are pushing up higher. What low created that high? That is here. So this is my new invalidation point, right? And the only problem with this backtest that I saw was that we are at like all-time highs, I believe. So because we're at all-time highs, finding a target is kind of difficult, right? And if we're looking at trend continuations, it would really be playing myself short if I'm just looking for this immediate high. But even then, that is still a 1 to 2, 1 to 3. So with scenarios like this, it really just depends on what you or how you scale out of trades. Do you hold full volume? Do you trail your stop? Do you take partials, etc.? And if I'm looking at this type of scenario, then really you can just trail your stop. If I am at all-time highs and I don't see this stopping, like for example, if any of you trade Bitcoin and Bitcoin has been kind of rallying for the past couple of weeks, if you catch an intraday scenario there, then you might be selling yourself short because the overall general bias is now technically to be bullish. So if I am looking for continuations to the upside, then it could be smart to just trail your stop, see how high I can go. Just because that could be result, or that could result in a 1 to 7, 1 to 8, 1 to 10, who knows, you know. But yeah, those are the two first backtests of the week. This was my first loss of the week, and this loss came from, give me 1 second. I kind of tried to time the market incorrectly, and I disregarded the behavior or the model that was happening externally. So my mistake here from a biased POV, right, was, I'll actually show you guys on the chart. It was right the sweep model that we have been discussing, that we started discussing last week. It's where we sweep liquidity, we create an unsubstantial new break, and after the unsubstantial new break, we have a transition into the upside. Because that is as so, that means that momentum has transitioned to be bullish, sorry, even if right the internal structure has technically been or is technically still bearish, right? So the only two ways that I should not be taking, right, any type of continuation scenario is if I have internal unwillingness or if I have an unsubstantial new break. I guess you guys can note that. But that's pretty much the lesson that I learned here, is that if I have a sweep model externally in play, right, then more than likely, if I don't have a full transition within the internal, then I cannot justify a bearish scenario, right? And my mistake was, go back to the chart, pretty much selling from a CBOS. Although we do see disruption in play, right, via here. If we see disruption here, then that was my justification to enter the trade. But right, from an external structural POV, this is just the pullback, and I should still be bullish because of the sweep model in play. So the strategy itself wasn't the issue. It was just my judgment of direction. So yeah, this was the first loss. I believe I closed it right around break even. Right, if we zoom in here, yeah, I closed around break even. Why? Because internally this is bullish, right? We did take out the final low into the high, right? And we had the disruption in play here. So after, right, we saw this give us a reaction. I noticed that this did not break the low. Once this did not break the low and it solidified, right, then it was pretty much my reasoning for closing the trade, right? Why? Because we created a new low. So how can I expect this to continue lower if we fail to create a new low? So another POV as well is if I was actually in alignment with this bullish structure and the overall narrative being the sweep model from the I believe it was the M15, then right, I could also argue that this was a bullish scenario in the form of a POI, and then we had an LGC. Once we had the LGC, then I have right a model into the upside. So this goes to show it's not a strategy. It's not the strategy that's the problem. It was my judgment of direction. So yeah, it is what it is with that one. Next, I believe this was just an immediate continuation. Yeah, so we had order flow disruption here, right? We caused the reaction, then that obviously took out, right, the previous order flow placement. So as soon as the order flow disruption was created, then, right, my immediate continuation was based on an internal SD via the form of high-low retracement, right, unwillingness, structural disruption, right, and my POI um, is the perimeter for us to continue higher. And this actually gave a pretty decent move. I believe this could have scaled out at almost a 1-to-6. So I guess from the to-do or on the to-do list for me is to see how I can correlate these pretty big moves or these immediate moves after the narrative has been built, aka here. Right, once this move has been created, I would need to measure, right, the potential impulse and not just look for the immediate continuation. So this would be a very, I guess, subjective look into where I should be placing my targets when this type of scenario occurs. But yeah, this ended up going for a lot more than this, but either way, a win's a win. And the invalidation was never met. I will say my SL was a bit aggressive here. But as I tell you guys, if the risk is understood, then that is okay. So I understand that my SL placement here could burn me, but I'm still going for it. And on to the next. Yeah, this was the sweep model that I told you guys about with EU where I made my mistake. All right, unsubstantial new break. Pretty much we take liquidity, but we create an unsubstantial new low, and there is a transition immediately afterwards. That's that. Right, and the final scenarios were from yesterday. Right, and this is why I, you know how I said in the previous buy that I could have held longer. This is exactly why I don't, because if I was to hold the original position a bit longer, right, as if I was to do with the previous scenario, then I would have hit a break even, right? Because realistically, I can also make the same justification here where we have a transition, here via the form of LGC, excuse that top line, but we do have an LGC model in play. We have a change of character, and this was where the immediate continuation occurred. Right, so there is, right, a model essentially creating the picture for us just as it did for the previous scenario, but this time we did not continue all the way or pretty much to that 1-to-6, 1-to-7, 1-to-8 range as the previous move, right? And this just kind of justifies to me that I should 100% continue, right, to only aim for the external targets, because at the end of the day, I don't want to be right the entire time. I just want to be right for a small period of time. Because if I can do that consistently, then that is how I can, take money from the market. If I can't do that, right, and I'm just trying to overestimate my targets, right, or underestimate where reversals will occur or where continuations will occur, right, then it'll ruin the entire system. So this kind of just goes to show that I should maintain my rules, even if I could have justified a different rule with another scenario. Why? Because we want to pretty much stay as restricted as possible, but at the same time, we also want to be conservative with the approach to the point where we know we can win, and we can win more than we lose. So that's kind of like the lesson that I learned from this win here. And then after that, we see the sweep model. I will say this was kind of a micro trade, not really my favorite type of trade, but the sweep model came into play, right? The internal continuation was there. Why? Because there is an internal CBOS and then a break into the opposite direction, but my invalidation is up here. So as long as that invalidation is in play, then I can aim for the immediate target. So that is that for today. Not the most eventful week, I will say. But yeah, does anybody have any questions, any concerns? What do you guys think, etc.? Is there anything you guys want to cover before I send this over to Alex? The meaning of LGC, that's one of the models here at RCV, liquidity graph continuation. 3 models. Well, it's 4 now, technically, because you guys know that I scrapped the original 4th model. I'll just go ahead and write these down for you all. Excuse me. Order flow disruption is a failed POI. Structural disruption is a failed structural continuation. LGC is right an LG in alignment with the external. And a sweep, right, is a minor BOS with an immediate reversal transition. I need to figure out how to make that a much smaller definition, but yeah. Why don't you target the first low with the sell? Good question. All right, since I saw this to be my sweep model, right, then I'm usually aiming for the immediate external point of liquidity. And the immediate external here would be the final low that created a high, which was up until here. So this is only a CBOS technically. So I'm aiming for my structural points, my solidified points. So here, the final low into the high was here. That's why I aimed for this high. Hope that makes sense. You don't always get an entry, but you know a result such bias is going to follow. Can you elaborate on that, please? Did you see some models as like not always entry models, but a show of hand model? Yeah, I mean that's the entire point of a trading model. I would say is for price to show its hand to you, right? A sequence of if this happens, then I can do this, or I could risk this. If this, then that. Does that make sense? So when would you be targeting internal with the same model if the entry is aggressive? It just depends on the situation. Like for example, right, the first trade or the winner this week. Let's see, or the first winner. Sorry, not the first trade. Let me pull it up again. Here, right? So this here. Model immediate continuation, kind of the same thing here. Model continuation. So I'm usually always targeting the immediate external, but depending on where we are, or just depending on how price is laid out for that specific scenario, I can choose whether to aim for this high, or let's say this high was a bit higher, or this wick here was a bit higher, and I was just going off of the internal transition, then I think it makes sense to aim for the external high here rather than just here. However, if I am to do that, then I do have to kind of switch up the invalidation rule, just because in this type of scenario, I'm not really moving my invalidation. My invalidation kind of is always here for this specific scenario. This is the final solidified point. You guys know that I like to make my invalidation point the first external solidified point. So if I'm aiming for, let's say, an external high, or let's say this wick was higher, then once I break this high, then I can move my invalidation here. So that's technically almost risk-free. Does that make sense? Cool. Yeah, so SLs, targets, they're all usually solidified points. Cool. Any more questions, concerns? Did you guys take any good trades this week? You guys were pretty active this week, so. Cool. No more questions, guys? Any case studies? If you want, we can go through Alex's segment, and if you guys want to show me some case studies, then we can wait till after that, if that's cool. All right, cool. Alex, are you ready? Do you long 938E? Go send me a chart, and we can review it right after Alex's segment, please. Go ahead.
I can only share when you stop sharing, by the way. All right, cool. There we go. All right. How's everyone doing? Is everyone all good? Sorry for the delay. It was on me. I was driving, so yeah, all good. Thank you for asking. Does the mic sound okay? I'm in a bit of like an echoey room at the minute. It's the only room available. Okay, cool. It won't be this segment won't be massively long. Like Fredo said, there wasn't many opportunities today, but I think I had some slightly different ones to Fredo, so it'll be good to just show you guys. So I'll go through it now. All right, hold on. Cool. So this is the first one, right? It was an EU continuation, and I put it in my Discord, and I mentioned this was very aggressive, but I do think it was valid in terms of the overall structure and stop placement and target. I'll just kind of take you through here, right? So this is where the trade was, and just to show you, it's obviously externally bearish. We've got high, low, high, low, high, and then obviously this high is identical to this one, so it's got the same high value over here, right? And so obviously price failed to continue higher after forming this low. Now it could have continued a bit higher here, so say on this let's just say from this region, obviously because price took that low and had to move up, so there is a possibility that price could potentially react and go higher, but this just failed and it just continued moving lower. This isn't a disruption because one, the POI wasn't broken and there wasn't really a reaction. We did have like a bit of a move up, but there was no kind of BOS to class that as a reaction. So there wasn't that disruption there in order to 100% validate it, right? So I do just want to say this is an aggressive, very aggressive continuation, in my opinion. The stop size, as you can see, is 79. Oh, sorry, the entry is 679 and the stop is 695. So that's about a 1.6 pip stop. Obviously, plus spread on EU, it isn't too bad. It will, on a good broker, it's obviously about 0.2, 0.3. And obviously this SC being valid because this high was taken, strong reaction, breaking this point of structure there. Okay, so as you can probably see, it's quite aggressive. I do just want to point that out. And then straight after, we had a nice push in, and then pretty much an instantaneous reaction back down. Right? You could argue scale in here. To be honest, I don't know how comfortable I would be with putting my stop there. I'd still want to put my stop here, but then this perimeter just seems a bit too big for the target. So I also think that this would be slightly chasing an already aggressive move. So personally, I wouldn't have taken that. But again, it's down to personal preference, your rules, your models, etc. But that was the TP right there. And straight after, we had the move up. So the TP placement was on point, which is always good to see. And yeah, that was the first trade. Pretty self-explanatory. Next trade, right? So this is a loss I took, and I think it was around the kind of same time as this. So it was Feb 12th at 1:30. And yeah, so it's around the same time. And this was, slightly, I saw it as slightly more valid, but you could argue on a bigger scale. Obviously, this is on the 2 minute. This is quite overbought. Sorry, not overbought, oversold. So it is, I don't want to say it's forced, but I do think, there's an element of chase in this as well. And the loss wasn't the full loss here, which I'll go through in a minute. It was moved because we did have a transition, which you can see here, but I'll go through that in a sec. But basically, very simply put, again, same kind of thing. We have an externally bearish high there market, but this low, Fred, I'm not too familiar with your kind of, I know it's the model's in development right now, but I could be potentially mistaken here in the fact that this is something you'd class as potentially insignificant, but I don't want to make it out to be that because I don't know. But we had a very strong reaction after price was breaking this. So that's kind of a red flag already in itself. But the POI was here, basically, obviously after that being there, invalidation being at this high, because that was the high that took this previous high and broke this low. And then initially price ran up, missed it by a pipette on the chart. I did enter right there. So I was in the trade for the duration of price going down here. I'm just going to thin that a bit. And then price did go back up, took these highs, and then broke the low here, right? And we had, in my opinion, a disruption here because we reacted from the POI, valid POI, because it took liquidity, strong reaction, and then we broke a high here. So there's a reaction from the POI, but the conversion failed, and then we broke below this POI. So to me, I see potentially there's a potential scaling over there, but again, you're kind of getting these insignificant lows. And, if you did miss this trade, I can understand why this would have been a scaling. I didn't take that because I was already in the trade, but my stop was moved to this high, as I mentioned, and the scaling entry would have been at this high as well. So if you obviously did miss it or you did want to get into another trade, then your stop would have been pretty valid there. Okay. And then what ended up happening was we had a reaction from a POI here, which I'll show you in a minute. And price then reacted and took this high and then did whatever afterwards. Okay, so I took the tiny loss there. It was like less than 0.1%, so it wasn't a massive deal, but I'd say it's probably my fault for just, I think my TP was too generous, to be fair, right? Because if I go onto the chart, I'll show you now. Hold on. Let's get rid of all the drawings. February 12th. Over here. So as you can see, this is where the trade was. So I was in here, took it like the pipette below, stop was originally above there, right? So we're in this section. If I just go back in time, we can see, I think there was an M15. Yeah, here it was, right? So we were technically on a bigger scale. Bullish in this sense, right? And obviously I was taking a sell here, targeting an M1, again, just a mistake I made. I was targeting like an M1 POI here as my target, which obviously failed to hit. And then we had the reaction instead from the M15 here, right? From this wick, something would have been within there, touched down, grabbed these lows, and then broke the high, which is fair enough. And then did it keep running? Yeah, so it kept running after that, right? So again, like Fredo was saying on his trade earlier, it's not necessarily anything wrong with the strategy or the model. It's more the perception that I had and the mistake that I made based on my take profit, and just more on the bigger scale. I didn't necessarily zoom out to see, okay, cool, what's the bigger picture here? So again, a mistake, but you know, these things happen and we learn from it, and that's what's most important, of course. And you know, there could have been, I mean, I don't know if there was, but potentially after this liquidity being grabbed, there is this entry over here, right? After this high being broken. So, sorry, let me clean this up. After this high being broken, entry here. And then obviously you had the reaction. So if you're targeting this high or even the POI, then you would have had a trade there. Or if you're targeting higher and you didn't move your stop, then you'd obviously be in, but it depends on obviously the type of trader you are and where you're targeting, but that would have been your trade there. And I don't know how far this carried on going up, but in terms of perimeter, that's 6.1 pip stop. So it would have been a 1 to 2 at this high anyway, which is again really good. And to top out, assuming you did, well, let's say this POI here, 25. So about a 1 to 4, let's just call it, just a bit more than a 1 to 4. So again, my mistake, but you know, it just shows that when there's a transition and you're wrong, the opposite direction could be in play. So yeah, that was that GU, and that was a small loss that I took there. EU. So this was, let me just go through quick. Yeah, so this was trending down originally, right? But something that I sometimes do forget to neglect, I feel like some people do, is that we were sitting within a daily SC. So the daily SC, I think, was here, and we tapped into it, had a reaction, price came back down, and we tapped a bit lower into it. So I thought, okay, cool, that could potentially stimulate some bullish movement. You know, I don't want to sell into that daily POI, because obviously you're seeing a daily POI like an SC, it's going to have a lot more weight to it compared to, say, obviously, if I'm at, say, an M1 SC over here, right? Just say, excuse the drawing, but say there's an M1 SC over there. That's not going to make me think, oh, I'm going to go higher. But because we were at that daily, like I said, there's a lot more weight to it, and this could potentially have an upside move. So that's what eliminated my sell bias. I would understand though if there were sells going on here, because there is quite a nice kind of LG continuation there, and then price obviously pushing up. So if there was a conversion before going lower, it makes sense. But that was the reason, well, that was the thing that stopped me from looking for a bearish move and rather a bullish move. So obviously this is a more zoomed in version, and I saw that we had this, right? Tons of reaction, broke the low, and then broke the POI. So some form of micro OFD there. And I thought, okay, cool. That's a good formulation for a trade. It might be a bit aggressive, but I'm aware of the risk, and my stop isn't below my internal POI here. It's below the invalidation, which I've classed there, because we took this low and then we broke a high, therefore having an LG. So that to me was a valid move, and price did tap in and we ran all the way down kind of near to the invalidation, but we failed to break it. And we did print a newer higher high compared to this and compared to this. So it's good to see that again. If I went very aggressive with my stop size and had it below my internal POI here, I would have lost, and it could have grabbed and ran, which it obviously did over here. And, I would have been out the trade. But because I wasn't greedy with my stop, I already was aware the entry is a bit aggressive anyway, because we have here, here, and here. So I'd rather have at least one of the two things I can control, which is my entry and my stop, excluding the target, of course. I'd rather have one of these conservative, obviously having the stop being the conservative point over here. And the reason I didn't look for entries here, because this could have reacted and carried on going higher, right? I don't need to look for entries lower here to try and get a lower entry and then get a smaller stop, because I want to get a higher RR. It's just not the way it works. Winning is what matters, and that's the key thing. And there are three things that can happen to a POI, which we're discussing in the RCV free chat. Is let's just say this is your whole POI here, right? Price can either mitigate the open, price can either mitigate 50% or close, or anywhere within that perimeter itself, or it can grab it and then run, right? And that's why it's important to know that I think people in my group specifically, perhaps getting OFD confused with just a mitigation. This isn't OFD, whereas very simply put, let's just say there's a valid POI here, right? And you've got price obviously trending down, and then you get a reaction, which are the breaks of the low, and it's a failed POI because it breaks here, right? Very simply put, there's obviously going to be more things coming up. Well, obviously Fredo's doing his books and stuff. But again, that's just me trying to illustrate it in the simplest way possible and the way I see it. Okay, anyway, so as I was saying, we came in, entry was hit, traded down, and then we traded higher. And once we traded higher and broke this high, I moved my stop from here to here. Okay, and then straight after, I wasn't at the chart obviously during this move up, so I wasn't able to show exactly when I moved it to there, which was here. But and then straight after I took that, we had a break of this high. So technically we've got our new range from this low to this high. So I moved my stop here just to, again, cut my risk. And I think it's valid as well. We're very near the TP. So I don't think price is going to come back in and break this low before hitting TP. So I think my invalidation there is valid. And see a few minutes after, TP's hit. And the TP is at this point here. And I could have targeted higher and higher, but again, when we're in like this region of a bearish, let's say a bearish external trend, if I'm buying, say here, I'm not too fond of targeting the high. I want to target, say, a point of interest that is within this bearish leg, because this could all just be like all this OFD, this, BOSs, etc. This could all just be a pullback into this point of interest here before going lower with a stop here. So I'd rather be conservative about now my TP as well. I'm not going to risk the whole trade just for an extra 0.25%. It's not worth it in my opinion. So that's kind of my thought process behind all of that. Cool. Is everyone clear on that? Does everyone understand? All clear? I'm assuming everyone's asleep apart from Cheyenne. Okay, cool. Right, this one here, GU. I think this is pretty self-explanatory, to be fair. I think it's just one of those textbook setups that come and go. Very simply, price traded up, had a conversion here, technically unwillingness to break that high, then converted lower, formed a low, formed a high, which these were equal, and then formed a low. Price came in, tapped this SC here, and then had a conversion, breaking this low and this low all together. Nice reaction. And also on a micro sense, see, this is the M3, took these highs and then broke as well. Okay, so we had like a micro conversion within a kind of bigger term conversion as well. And it was good because it gave us this nice SC over here, invalidation above that SC, or if you want to be ultra conservative, above this high here. But again, being aware of the risk, and I think it's fine. And just came in and ran pretty much. I think we traded up to just over 50% of the SC, which filled the M1 in small inefficiency over there, and then just reacted straight after. But straight into POI, just one of those trades, which is just like perfect. Now, originally I did have my TP there, but I, again, just like to be a bit more conservative with my targets. Again, I spoke about this in a previous Zoom, I think it was last week. If there's equal lows, but one is slightly higher than the other, I do usually like to target that. And also as well, like, this is technically bullish internally until bearish, and I just targeted the internal POI here instead of the low. So that was just my kind of thought process behind it. Price, what ended up happening was price traded higher, and I think it mitigated this before going lower back into here, and then we had a big move up. I could be wrong, but let me just double check. It was GU, back in time, that's why. Yeah, here we go. So the entry was here. And then I had my TP there. So it was enter, die, hit TP. We retraced, failed to break this, which is fine. We did. So in this case, if you were entered and once price broke this, you moved your stop to BE, then you would have been taken out. However, I think because obviously price pushed into there, then went here, stops to be moved here makes sense, right? Or just keeping it there because this low hasn't been broken. And technically, if you're looking at it from a swing low, swing high standpoint, this hasn't been broken yet. So as soon as that breaks, then you can potentially move it to your drawdown high, which is this, which in our case here is that. But again, price came up into there and then died straight after, as you can see here, came up into there and then died. And then as soon as that occurred, we had news and again, a perfect TP placement, right? We're trading on scalp / micro timeframes. I don't need a swing TP, right? You need to have your TP / SLs based on the frame that you are trading on, unless you are obviously a longer term, well, even still, if you're a longer term trader, swing position, etc., you're not going to have an M1 TP with a H4 entry, are you? So it wouldn't make sense to have a H4 or even a day one TP on an M1 entry, really, unless it's very local, right? Cool. Hopefully that's all clear. Last trade, I didn't take this. This was a drill, if you like. I just didn't see this at the time, but I did see it after, and I thought it was pretty cool. Obviously, the whole bias, again, is being derived from the bullish daily and obviously this isn't classed as an LG yet, in my opinion, but from these lows as well. So we've got that kind of potential bounce to go to go higher than lower. This will stimulate and move up. So that was the bias. And then kind of just zooming into a leg, we had price top out, low, high, unwillingness. So kind of no man's land here, and then a break, and then a break of the high, sorry, another lower high, and then the LG, which was this, with this break, breaking not only that high, but this high as well. And then you've got our POI here, which is the first one, which is validated by this LG strong reaction. So in my opinion, that's a pretty good entry, to be fair. Stops below here, or for a, so that's be a micro invalidation. Then your true invalidation will be below that low, because that is the low of the range from here to here. And then again, just kind of had the same thing. So we had price push down, unwilling to go lower, and then a conversion up. I mean, technically you got OFD is there as well. You've got this SC, which was hit, reaction, it failed to convert lower. We broke the POI. So entry here, stops there. And if you were in on opportunity one, then you could move your stop after we had that conversion. And then again, same thing, LG, this group of candles here, obviously being one POI, because this is on the M1. If you went onto the M5, that would probably all be grouped together. And then price came in, had an LG there as well. And you could have potentially entered here, but I think that's just chasing it, to be honest, if you're entering on that. So I wouldn't have entered there. If I missed the entry here, then I just would have left it. But this is your most conservative in terms of POI, invalidation, and you're close to the TP. So 1 to 2.4, again, nothing wrong with that. In a single trade, it's brilliant. And that took about, say, 11:40 to 12:30, so less than an hour, 2.5% reached. You cannot complain whatsoever. And yeah, that was that. I did have one other trade as well, which was a 2-minute trade, which I made 1% on. I don't want to go through that because I don't want to condone that type of trading. It was just a very quick scalp on EU, so I'm not going to go through that. But that was everything I had for this week. It was pretty slow, but I think there were opportunities. And if you were aware of the daily bias on EU, I think you would have had a bit of a head start on the buys earlier this week. Over here, right? So what will happen next? Obviously, the kind of first target is here, right? But and then is that a CBOS to go lower? Who knows? We'll see. I can't just predict. We'll have to see what happens, and then we'll take trades according to that. But yeah, that's everything on my end. Any questions? Any questions? Yes, no? Just let me know if you're all good or if you've got any questions. If you think of any later, then obviously just drop me a message on Discord and I will reply swiftly, hopefully. If I do miss your message, please just reply back. Even if it's a day and I don't reply, just please just say, oh, you might miss this message, just re-messaging. And Alalibo, send me your journals. I'm still waiting. And that doesn't just mean trades you take, that also means back tests. I think it's been over a week now. And I'm not doing that, to be harsh. I'm just saying, it's best for your progress. Even if you trade differently, it's interesting to just see what your thought process thought processes are. Jesus. Right. I'll give you 2 more minutes for it to be 4:30, and if no one's got any questions until then I'm all good. I'm done on my end. Good stuff. Yeah, real quick. Just go over BTC because we were looking at obviously sells here, but I think it was more of a misconception. Oh no, it wasn't there, was it? Where was it? Where was it? We were talking about sells. I can't remember. Anyway, I think the overall thing was it looked like there was going to be a conversion here, but price failed to do that, and it just literally just had higher lows ever since. And as much as I hate to say it, I don't know if I can see this stopping personally, which is a bit of an annoying one. But I'll send some updates on BTC anyway. I think what I found, actually, I was backtesting it, and there are some pretty good price movements on BTC on an intraday perspective. I think because it's so trending, right? I mean, it's kind of like a one-way trend. When you get a bullish conversion, it always just reset, and it just keeps going and going and going. And the mitigator, like everything in terms of just the whole order flow of it, I think is very, very clean. And in your spare time, just do some back testing on it. I think it's quite cool. I don't trade crypto. I haven't traded it in probably 2 or 3 years now, since like the whole futures ban just hasn't been something I've done. But yeah, I don't know I don't know if and when I see this stopping, to be honest. XRP, like, again, it's just not looking very good. I mean, we're still technically stuck within this range. So we'll see. I do just want death though, honestly, all round. But you know, yeah. There you go then. That says it all. Anyway, we'll touch base with that. If no one's got any questions, which no one has asked, then I'm all good. Fredo, if you're all good.
Yeah, we still got time. Does anybody want to go through any charts? Does anybody want to review any case studies? Anything you guys want to show? We got time. Oh, what did you guys think of the well, right, the PDF that I sent you guys? I believe it was Monday. What did you guys think of that? That's kind of like I want to say it's like the table of contents. Pretty much everything I'm going to consider with the new content. Let me see if I can open it on here. All right, so this is kind of what everything that is I'm going to cover in the new content that I'm making for you guys. I kind of organized it as so as well. I think this is the best order. Even though I think that that your approach is kind of more important than the psychology, I do want to put the psychology part first, mainly for the expectations section, right? If we can establish a frame or a type of mindset prior to making the system, understanding that the system is more important than the psychology, then I believe that can kind of just set up a good foundation. So that's why I put psychology there first. Risk management, market structure, order flow, trading. Trading models. Sorry. Is there anything that I missed on here? Let's see. What are you guys saying? Yeah, this is kind of everything I would say that we've talked about up until today, from let's say the start of RCV, which is 4 years ago at this point. Well, it's 4 years and 2 months, but yeah, what do you guys think? Did you guys go over this? What did you guys think about this? Or did you guys even read over this? Because I only got like 3 or 4 responses, I believe. Yeah, I only sent this in the RCV group. I didn't put this in Alex's group. I could send it over in Alex's group, see what you guys think. I'll go ahead and put it in the chat right now. When will this finally be out? Good question, man. Good question. I had no idea that it was this difficult to make a book. Not to mention my UI skills aren't really the best. So I'm still in the process of, well, this was like the process I wanted to first get everything that I wanted to put in it together. Then I wanted to organize it. Then I'm going to add the chart work. And then I'm going to make make it look pretty per se. So we're kind of in stage 3 is adding all the chart work. And I went this route rather than the video route just because it's, in my opinion, it's a bit more efficient. I can be kind of straight to the point with the book rather than having to set up a whole video, set up like 5 examples and then make a video for each one. I think this is faster. But yeah, this is kind of that. This looks very bullish in my opinion. Yep, this looks very bullish.
You're not sharing anything, by the way.
Oh, sorry. Saying with this looks very I'm very bullish, sorry. Liquidity here. And we are currently bouncing off of the immediate daily inefficiency. Daily inefficiency has been met. I see this kind of rallying a bit next week, at least to here. Would be my immediate target. After this, we don't know what can happen, but I do see this kind of breaking. But yeah, very interesting. Once we break into this green area, then we would have disruption here. We would have disruption here. So we'll see. We're currently bouncing off of a turbulence point. So I do see this kind of rallying into the upside. But yeah, other than that, do you guys have any questions, concerns, anything you guys want to review? Anything you guys are confused with? Right, because I do see what people do in terms of the chat, in terms of well, I guess in terms of the chat, both chats at this point now, and I do want to say that I am here as a resource. If you guys need anything, then I am here. Right, if you guys need case studies, reviews, journal reviews, if you guys need help with a concept, if you guys don't understand something, then please don't be afraid to reach out. right? If you guys do not reach out to me, there is no possible way I can help you, assist you, or give you any type of feedback. Like at the end of the day, that's why you're here. So don't be afraid to use me as a resource. Of course, I don't like to hand feed you all, so I will try to answer it in a way, or answer your requests in a way that can benefit you for the long run. So either way, don't be afraid to reach out. But other than that, unless you guys don't have anything else, I think Alex has one more trade to go over. But yeah, other than that, if you guys have any questions, please send them over in the chat. Okay, you can go ahead.
Cool. Yeah, it was just one today. It wasn't one that I took, but it was a mistake that I shouldn't have made. So it was basically this whole setup here. I was anticipating a lower price just based on everything here, but the point of this, hold on. Let me just open it up on here. So I'll go through it. Hold on. Yeah, so this was obviously the entry. We had like price push up, push down, push up, push down, push up, push down. I didn't want to enter before this broke. I was just waiting, but this is the kind of preemptive move, and I was looking for this whole POI here. And where, like, I just want to ask, obviously, apart from the people in my group, where am I wrong with this in terms of the entry itself? You might have seen it on the chat beforehand, but if you didn't see it, what's actually wrong with this? Where should I have entered instead? You can, if I don't know if people are allowed to draw, just point out. Actually, you know, I'll just say basically should have entered here, right? Because technically this is the whole POI. And what ended up happening was the whole POI got hit here and then it reacted, and that was it. And obviously the TP was again being at this point of interest here, because again, it's bullish externally and I didn't want to wait for this low to get taken. So I'd rather just target there. But that was basically it. That's all I really wanted to share. But that I just forgot about that one. But that's it from me.
Cool. No questions, guys? Cool. We can go ahead and end it off here then if we have no questions. Awesome. Feel free to send over journal reviews as well. I will probably go through them on Sunday. But other than that, I will see you guys next week.
See you guys.